Good afternoon and welcome to a video on stage 2 and stage 3 of the trade. Today is the 9th of October 2019 and we can see in the chart here that Bitcoin prices in the background are breaking a little higher and many of the alts are breaking lower at the very same time. So we're having the alts, we're setting up into these beautiful bottom formations. Many of them have taken off and coming up to new support and resistance levels. And then as Bitcoin is breaking out in the background, many of the alts are pulling back. And at the same time, we're seeing Bitcoin dominance starting to pull back from its drop as well. So now it is coming back up to retest this resistance level from underneath. And the altcoins are slipping back from little breakout patterns. And it's a sharp move. And people are freaked out about Bitcoin taking off. The altcoin community is paying attention to this. Many people have dumped their alts right away to jump on the Bitcoin bandwagon, expecting, there's panic both ways. And then the big question is, what should we be doing now in trades like this, like basic attention token? And so I wanted to do a video about stage 2 and stage 3 of the trade. Let's go through all of the stages and just point them out as things progressed in the chart. Let's imagine that we're trading the simple trading plan and that we are not trading on the 4-hour bar time frame. Instead, we're stepping back and we're trading on the 12-hour bar time frame, and we have to have a few things line up for this trading signal to be valid. For the simple trading plan, the first part is that we have a break of the downtrend line. Bottoms always take longer to set up than top formations, and so we're expecting that we'll have a 1, 2, 3 bottom formation set up after the break of the downtrend line, and as it breaks above, our signal is here. You may wonder if the signal should be here, and it could be depending on your risk control rules, but in the simple trading plan, you have to have all three of these things set up. So the cross of the exponential moving average on this breakout may also have been an entry, and then you just have to know how you're going to play your risk control rules afterwards. But if you would have gotten in here and were playing the most risk adverse rules, we would be closing this position and getting out because it didn't prove us correct. And then we would start again, and we couldn't start again until it broke above the next 1, 2, 3 formation, which is here. So this is this. Imagine that this is the start of our trade now, that we've got the break of the downtrend line, that we've got the 1, 2, 3 formation setting up here, just a little more agreeable color, and prices have broken out above it. In our strategies, in stage 1 of the trade, we see it coming and we're planning it out. This is an alert right here. We're being aware that our breakout is coming and we could be in a trading signal. And then the next stage of the trade is once the alert is signaled and we get the trade order, we take our position, like we take the first part of our position, and then we're watching to see what's happening after this. As soon as we can, we get our stop loss above our entry, and then we're going to leave that there to say protect ourselves if prices do come back down. So now our job is done. We have followed the market. We got our trading spot. We put on our trading position, and we were able to get our stop loss just above our entry. That's the most important part of our job. So if we had gotten in here and put our stop just above our entry, we would have been kicked out. So we'd have to start again by getting in here, put our stop above our entry. Now we could be in a valid trade. The other requirement for exiting our positions is the 4-hour time frame exponential moving average crossover. And so not even the top formation is our exit signal for this. We are waiting for the 4-hour EMA to cross over, and we are allowing the market to some. And the reason for this is we want to allow the market to have some elasticity to do some freak out movements that are not kicking us out. And at the same time, we want to be getting out if the market is changing direction enough that our exponential moving averages are going to cross over. It's probably going to kick us out with a little bit of profit on this trade. An alternate plan is to only get out of part of your position on that 4-hour exponential moving average crossover and wait until the 12-hour crosses back over again to get out of the second half of your position. And so this part of the trade here gets a little fuzzy in how you put together the options. There are a number to select from, and it's important that you know the range, where here's the minimum option, the minimum risk option, and here are the increasingly more risky options that I could be doing. So one way to trade a 1, 2, 3 bottom formation is to put see the 1, 2, 3, and as it's breaking out, you would put on the first part of your position. And you would leave your stop loss below the number 3 point until the market made 2 technical levels. On the creation of the second technical level, we would move our stop loss up above the technical levels, and we wouldn't move the stop above our entry just because it's the number where we entered, but we would leave our stop at significant technical levels rather than monetary levels compared to our entry level. So the more often that I've put my stop above my order because it was where my order was, very often the price comes back to technical levels and ignores where my order was. And if I would have paid attention to the technical levels and given it that extra space, many times it works out. But the trick is to use rule number 2 at the beginning of your trade and don't go heavy. Go into a small bit into many different coins so that you're not heavily affected by the move of any one coin. And plan that we're not going to put on our full trade until later when the market really proves that it is changed directions and we are on a trend. So those two things put together with our monitoring our risk control here, getting our stops above our entry, paying attention to technical levels, and then exiting when the 4-hour and the 12-hour EMAs cross, it gets us in for the potential opportunity and kicks us out when it is proving itself not correct. So there are an orchestra of things to do at the beginning of a trade in order to make it work correctly. And there are a number of considerations to put into play depending on how you're going to play it. Depending on the size of your position, how much of your portfolio does this represent? All of those things come into play in where you build your positions and how you build them. So in a wrap up, what I want to emphasize right now is that if you were into these stages and we're doing it textbook wise, we've got our stop loss above our entry just for the most important risk control. And we're going to plan to add on and have a bigger position later. So if this doesn't prove correct, it's okay. It's a very small position. There will be another chance. If it does come back and kick us out, there will be another chance for us to get into this. So it's okay. Now we are into the trade. I don't want to get out. I want to give it the elasticity so that the 4-hour exponential moving average, now I want it to cross over before I get out, which means that I'm willing to give up a whole bunch of what profit may be there, what it looks like profit. This looked like I had all that profit, but in reality, my stop is just above my entry. I am still waiting for much bigger moves to move my stop loss up under the next technical levels. And I'm not going to get freaked out by moves like this. I'm going to have enough leash on my dog to let it run back and forth along the trail, so long as we stay on the trail. As soon as we're coming off of this trail, those exponential moving averages will cross over and we'll get out. We'll have taken our risked entry and we'll get out, and we'll watch for the next one because it will come. So pay attention now. Tomorrow in the bull market watch spreadsheet, we'll be watching closely to see if any of the markets are crossing over on that 4-hour EMA. I hope this video is helpful for you in deciding what to do at this stage of the trade. For my own part, this is what I'm thinking is going to come back for one of our potential add-on positions. This could be if we got in here and we have our stop just above our entry, prices come back and don't kick us out and then start to show strength out of these areas, we're going to have a whole bigger ascending wedge triangle to be considering. So either we are in the pissing off the roof formation and we're going to get out when those exponential moving averages cross over, or we're building a bigger ascending wedge triangle that we really want to stay in our positions now. If we have a profitable position, I don't want to get shook out of it just in consideration of what is to come. I want to stay in this position. I hope that helped. I look forward to hearing back from you. Talk to you on Discord. Bye for now.